Good morning and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bargmann, and I'm very lucky today to be joined by not one, but two senior figures from PathPoint. We have Alex Bargmann, I should know that name, given it is my own. Alex Bargmann, CEO and founder of PathPoint, and we've got Ralph Blust, who's president and CRO. Gentlemen, good morning. How are you?
Good morning. Welcome.
Good. How are you?
Yeah, I'm good. Now I've remembered that both of our names are Alex and rather than Alec. I tell you what's funny about that. Alec is like my hated thing that people say my name as, which is usually reserved for the Scottish people of the world that like to call me Alex. So I apologise for that. That's not a good starting point. But Alex, let's bring you in to the conversation early. As CEO and founder, perhaps you could introduce obviously yourself and the PathPoint business, and then Ralph, if you can follow up. And you're a bit newer to the business, and you could introduce yourself as well. That'd be great.
Yeah, I have a couple co-founders as well, and none of us come from a insurance background, let alone specialty or E&S or wholesale. Came from technology and software development for the most part. But we were working at a fintech investment fund that also incubated some businesses, and we got pointed towards E&S as where the value chain is sort of heavily paper driven, strong amounts of intermediation, high transactional costs, slow turnaround times, still very service driven, even at the lower premium end of the market. And so those were all sort of patterns we were interested in digging into. And then that's how we sort of got into PathPoint from there.
Mm-hmm. Mm-hmm. Awesome. And Ralph, obviously you're, I think we were just saying, is this month 3 with the business? But I know there's a crossover because you did some consulting. But what's your journey into the business here?
Yeah, so unlike Alex, I've spent my entire career in the insurance business, and ever since probably the 1990s, I've been a big advocate of insurtech, even before it had a name. Built the first MGA that I did was actually on an Access database where we were doing monoline workers' comp for nonprofits, and that was back in the 1990s. So, all along the journey, I've been very focused on how can we address the needs of the small commercial P&C insured using technology, and how can we make that efficient both from a user experience and from an operational experience. Mm-hmm. After my previous engagement, I had some time to consult with PathPoint, and I really saw their interest aligned with what I was hoping to do at this stage in my career, which is to really revolutionize the way in which excess and surplus lines business is distributed, is processed, and the way we integrate with carriers, really soup to nuts, the entire process, making it so much more simple and easy to process. And that aligned very heavily with Alex's vision. Mm-hmm. And then when we were working together through the months, it was just so obvious that by partnering together, we could accomplish a great deal.
Yeah, it's that classic combination that we're seeing so much more of now. Is that bringing a sort of technology team and a technology mindset and thinking, and then that insurance knowledge as well. But Ralph, you're a rare beast, as I think you and I have discussed before, which is looking to embrace that technology. It's hard to evidence if you come from a long carrier or a long broker. It's one of the recruitment requirements I'm constantly working on is they're saying, find me someone who can work with technology that's an insurance person. And it's quite hard to evidence. So it's interesting that you have, but as you rightly said, I think there's people been doing it longer than people say, but it didn't have a term until about 5 years ago. So insurtech is what we're going with. Alex, I wanted to ask you, coming from the technology side and being a technologist in terms of kind of background, like how technology has changed how agents place accounts today versus, even 5 years ago, and where is it today? Because that's obviously something that coming to this solution, presumably, was that the starting point?
I'll come back to the first part of your question.
Sure.
In a second. I think for us, the the starting point was looking at the wholesale distribution channel, really actually from the carrier perspective, and the difficulty in getting trading partners in that segment of the market to utilize technology and tech systems that they deployed in their retail channel, or patterns they deployed in their retail channel that they wanted to put into wholesale. And that informed a lot of where we started in some of the first pieces of software we built. It was eventually became very clear that the thing to anchor the business on was exactly what you said, which is what is the American, in our case, the American agent or broker's experience of placing E&S business, and how are their needs being well undermet by some of the existing options out there. And I think once we had that sort of visceral focus on that idea, that's when things started coming into place on what to do. It became quite easy to make decisions when you think about that. And we focus even more on the sort of CSR account manager, the back office that's doing these placements. So that is a bit of like our starting point, and then how we kind of turned into what I think you're asking about. What they're looking for is many, many, many things, and it's multi-dimensional space. I think one thing we talk a lot about is self-service. So the US agent, broker, CSR, their expectations are that they can do the work that they need to do with the counterparty, in this case, a wholesale broker, surplus lines broker, MGA like us, but they can do it on their terms and in a really low friction, usable way. And that to other industries is like so self-evident, because sort of the self-service revolution in consumer sectors and other sectors of the economy happened over the last 20, 30 years. But in commercial insurance, and in the admitted space, it really only started happening over the last 10 to 15. And then in E&S, it's really only just started quite recently. And so that's the ability to quote online when you want to edit something online, to request a modification. Doesn't have to be fully automated. It's just the ability to have control to self-service an account. I think that's what we think about a lot when it comes to agents. I don't know, does that make sense?
Yeah, of course it does. Yeah, absolutely. But it's fascinating, isn't it, when you're saying that, because most of that is that we consider that just the norm, right? In our technology requests from a software that we use, but it's fascinating that it's new stuff to insurance. It shouldn't be.
That's because the other thing we noticed was that there's very little connectivity in the wholesale marketplace, which is like kind of this rudimentary term when you think about digitization, but none of the, and there's counter arguments to this. You've got lots of platforms that'll do policy document exchanging, and there's ways to do bordereaux effectively, not just in London, but in US, but there really was no dynamic connectivity. And so that makes self-service very difficult, because then you have to rely on a person to service something, because there's no way to connect it to a digital interface. And so there's real structural challenges to it, sort of what you're pointing out, right? It's like, it should be obvious, but it's not, but it's there's many layers of the onion that still need to be peeled back in commercial insurance, E&S in particular. How
do you guys position yourselves? I'll be interested to see how Ralph sort of views this as well, because it's sort of coming from the insurance side, because you're sort of competing against several components of the market, like pure technology providers, arguably kind of alternative kind of like broker-led solutions. I'd be interested to see how you view yourself as a business, and then going forward, and how you present yourself, and also sort of where you sort of see the sort of main competition coming from. I don't know if that kind of, I'll leave it at that. I'm sure you could take it from there. I think there's an argument to say, we're operating in a space independently, but I feel like there's kind of multiple competing elements for what you do. I don't know if you'd agree with that, and how you actually position yourselves as a business.
The way I look at it is that who we are today and who we're evolving to are really an evolutionary component. to break into this space, it is an extremely complex, difficult technology lift to go into the E&S space and work on small accounts and make the transaction so seamless that to an agent experience, it seems like it's a standard market placement.
Yeah.
And really, that's been the North Star that we've been working to. And so as you look at that, to try to bite off the 1,200 SIC codes in the E&S space is really, you're trying to eat the whole elephant. So we've really tried to position ourselves right now more in a specialty verticals, starting with the specialty verticals and expanding them very rapidly. Today, I want to say we're close to 300 verticals amongst our various products, which means we still only have a small percentage of what's available to the E&S space. So we can't really position ourselves where we want to be, which is this digital wholesale broker today, because we would be saying no too often to the agent and the user experience wouldn't be right. It's much easier for us to position ourselves today as more of a specialty digital solution in the E&S space. And then as we grow, as we start to expand, that's when we can start being more of what we want to be, which is this digital wholesale solution for the small commercial, and then maybe other directions as we mature.
Yeah.
I don't know, Alex, if you wanted to add more to that, but I really see that's who we are today, and that's the way we represent ourselves in the marketplace.
No, that's the way I think about it too, and that we spend a lot of time with our carrier partners. We generally prioritize it going deep and broad with a small list of carrier partners. We don't go appointment chasing because it's not about access, it's about user experience. And so we spend a bunch of time with the underwriters at the carriers we work with to figure out which of these verticals that Ralph's alluding to, contractors, lesser's risk, cyber for small business, they are really great at, and they want to be differentiated on a digital distribution and product standpoint. And then we build them into those verticals. So it is both a very highly differentiated user experience to get a quote, a few minutes, all the service capabilities online, but it's also tier one product and underwriting capacity behind it. So we can be the first option an agency would go to when they get declined in the admitted market, because it's both the easiest and it's the blue chip carriers and markets that you want to work with. Now, the trade-off we had to make, which Ralph was alluding to, is you have to say no. So you can't you can't do the typical wholesale broking, which is send us everything you've got, we'll take a look at it, we'll try and place it type thing. You have to be razor focused. And it's a very difficult marketing and sales problem, because you have to get your salespeople excited. And I'm really taking Ralph's credit on this, about selling a solution that's specific and niche. And so we've had to really think about our positioning to lean into where we're strong, while knowing that there's this big gap of where we're weak right now, but we want to grow into it over time. And getting everyone pointed in the same direction internally and externally is easier said than done.
But I suppose that speaks to how you're sort of challenging slightly how the market views this, and Ralph, there must be you could bring this sense to the table about culture, because you're talking as much about culture change, aren't you, as anything else. It's like you can offer the best technology, but far be it for me to say that culturally, like the insurance industry is slow to change. But I think we can. I think I'm on episode about 75 of the podcast now, and I think universally that's been a theme. But you really are talking about an established, and I think because of where you're playing in the market, we saw lots more early adoption. Direct to consumer markets in insurtech is earlier. The life and health market's been earlier. As you go up the value chain, we've seen less innovation in the sector that you're in, like E&S lines, and then also reinsurance, because there's that less touch points, and you're trying to change the culture of an industry. Is culture something you come up against? And I suppose, Ralph, and perhaps you with the CRO hat on, is that one of the challenges you come across?
Well, it's actually a very interesting question from the perspective that agents welcome this change. Agents
Right.
are always looking for the path of least resistance, how to take something that is marginal in profit for them to begin with.
Mm-hmm.
And then it goes to the E&S space where now they know they're not going to really make a lot of money because the amount of work that it takes to place a $3,000 contractor. So what they ultimately do is that they're actually welcoming this streamlined, simplistic approach. And they are, the adoption of this culture shift has been striking. And it is consistent with what I've seen in other ventures that I've been engaged with throughout my career, where when you solve the problem of the agent instead of trying to tell the agent how to behave, when you solve their problem, they will come to you. And they'll not only come to you once, they'll come to you again and again and again. And that's, some of the metrics that we follow is what's the percentage of agents that are repeating the transaction with us. They're not only testing us once, but they're coming back, and they're coming back with a high degree of frequency. That's where we believe the solution sits as a value proposition to the agent. And it's less of a culture shift from a user experience, because the agents have been seeing this through carrier systems in their admitted market space for years. So really what this is, the shift is more about the behavior change from the supply side to the agent, giving them in a quadrant, as you said, Alex, about how really there hasn't been a lot of attention to this space. And let's face it, 70% of all business is placed in the admitted markets. So we're talking about a sliver of the overall universe. And then of that sliver, we're talking about the smallest of the accounts. So you're really looking at this micro niche. And so that's why I believe most firms haven't invested in this space. They haven't made the digital investment necessary, the technology investment necessary, because they haven't considered the return. And yet, when you look at it, there's more business in this space than the rest of the E&S space combined. So, you're talking about what, 40 billion of the business is in E&S, and maybe half of that is in small commercial. That's a big pool. That's a big pool with a lot of fish, and that's why we're in it.
Yes, a decent TAM. Thank you for that, Ralph. Alex, I wanted to go back to the technology again. And this is a really interesting, I think is an interesting question that was, I think, posed by you guys. So I won't take any credit for this. It's something to discuss. But we talked about technology, and like there's some things we can do: autofill, downloadable PDF, accord forms, sort of evolutions of technology. But at the same time, so we're seeing advances there, and at the same time, like things are stagnant. Why are we using accord forms? I just wanted to sort of discuss that conundrum. Like how does that happen, and how do we operate in that? Does the regulatory environment need to change? And I appreciate that's a multi-part question, but I just wanted to get your viewpoints on that.
It's a great question, and one that you could spend a year writing a business school case study on, which would be interesting to do. I think that someone told me this, and I've been thinking about it a lot since, is that in commercial insurance, part of the reason it's so much friction during the transaction is every entity has its own process. And those processes in and of themselves are not inefficient or backwards looking. And in fact, they're quite excellently designed and run and operated, but they're all very, very different. And they all support edge cases in different ways. And that's because it's ultimately a client services driven business, which is one about supporting edge cases. And so if it starts at the top of the chain and everyone's got these different processes, you just end up with edge case spaghetti down the value chain. I think is part of it. Now, that isn't right or wrong. I think that's just the way it works. And I think lots of industries have that probably going on. To your question on why do we still use the accord form, that is I don't know if there's a pithy answer to it. There, it's funny, like we've built the feature on the front end that gets the data out of the Accord form. We've also built the feature that lets them take the data that they manually inputted into PathPoint into an Accord form. So you can bring an Accord form and you can order something, or you can order something and then you can get an Accord form for dessert. And they're both used a lot, which is kind of interesting, right? Because you'd be like, well, you should only need one to get rid of the Accord form. But the reality is that there's something going on in their business or the way they think about this account that they want to use it to start the quote or they want to complete one to place the account. Now, Accord's interesting. Lots and lots and lots of carriers, brokers, they need Accords, particularly for E&S transactions, but for commercial transactions at large too. It's still the PDF of record for what represents information about the insured. I'm not sure that the goal is to displace that. That's certainly not PathPoint's goal. I'm not sure that that should be anyone's goal. I think the goal should be to work around what people want to use to work on these transactions and make that as easy as possible. And that's sort of where we are. This is more a pragmatic view. We kind of just work with what all our counterparties want to work with. And our bet is that we'll use technology to execute that in a very user-friendly way.
But to add to that, it's part of the culture of PathPoint that is where we're making the difference. This feature about being able to upload and download, there's no benefit to us to download it to the agent, to give them the ability to go market it somewhere else. However, the culture of PathPoint is, look, we're here to serve. We're here to help our agents win. And if we can't help them on this one, we want to help them secure it regardless. Again, that type of mentality is unique within the insurance business, I believe. That uniqueness is what is allowing us to build these enterprise relationships that we've been so fortunate to gain in such a short period of time, and with such a large degree of distribution. It's because when we come to them, there's a very clear understanding we're here to serve them. We're not asking them to behave in a way to conform to us. And that's a paradigm shift.
Yeah, I think that's really interesting because it's a theme that I've seen of the insurtechs that I certainly, the investments into their businesses, including your own, suggest that people agree that you're doing things the right way. But I think that's a shift, even in, I would say, the last 24 months in terms of what I would view as being successful insurtechs, is there's a cultural embracement of the insurance industry and saying, right, we're operating in this space. These are the things that's what good looks like in this space, and this is how we can help. Rather than, I would say, if you went back 36 months, it was the industry is stupid and it does things really badly. This is how we're going to do it. And the kind of the classic insurance is broken. And those businesses, I wouldn't say they've lost traction. They've definitely lost some share price, but I think what we're seeing now is the much more collaborative approach with the industry, and that seems to be kind of success. Do you share that view? Is it something you've noticed? I appreciate that's your culture, but just speaking more broadly about insurtech, Alex, have you kind of noticed that the sort of change in tone?
Yeah, I think I have, and there's both like a personal observation and then a market observation, and they overlap. I'm and not quite as sure on the timeline as you, but definitely the trend. The personal one is like coming from a consumer advertising, education, technology background. You have distribution partnerships as part of your business, certainly, but it's not a partnership heavy industry. And certainly I wasn't working in the business development part of the organization. So I don't have a ton of experience with those types of problems. And developing appreciation for how important partnerships are to all parts of your business in commercial insurance, particularly wholesale brokers, because you're in the middle of the value chain, is really, really, really important. And so that I think is kind of what you're getting at in a way, is that you can't full stack everything, right? You have to be reliant on existing partners and do it in a win-win way, like not a negotiated taking something from someone else way. Definitely, to your point on the market, I have learned a lot looking at, and this is the large public insurtechs and also some of the still private ones. I think they're all doing this now. They're all developing good partnership muscles and accountability from the industry, I'd say. And you can see that the vernacular they're using about how they position themselves is evolving too. And I think we've been fortunate enough in that we started just at the right time where we could actually learn from them making their own journey in this regard, and then just stand on the shoulder of giants type thing.
Yeah, and look, I kind of liked it when it started. I thought, well, this is interesting. There's a bit of spice here. Insurance is broken. I was like, okay, interesting. Because I've been in the industry a long time, and I remember starting. I thinking I'm only going back 15 years. So 15 years ago, I started, and I remember going out to London, walking in Lloyd's, and watching all these people walk around Lloyd's with these suitcases, assuming that they were all taking flights, and suddenly going, no, that suitcase is full of paper. Yeah. And me at the time, having just left university, going, are you seriously? Like, this is I was like the most sophisticated insurance market in the world. I thought I was walking into the equivalent of, the stock exchange for insurance. And then I see guys with, so much paper, they need a massive suitcase. And I think, yeah, it's scary to think it's only 15 years ago.
Well, I mean, I remember the first time we were investigating this, went to London to learn about Lloyd's, and I saw the same thing, and I just my knees started shaking, and so it's not that it's not broken, and I put quotes around that word. It's not that it's not done, and it couldn't be done in a more efficient way, right? If we all adopted Taylorism to its absolute extreme, we could make things work perfectly. That's we can all design a better spreadsheet on a blank sheet of paper, right? That's not the hard part. It's understanding why it's broken and appreciating that those embedded value systems, and then understanding what the actual product that needs to be delivered is, and then putting that puzzle together. That's really, really, really hard. Everyone can sit at the coffee shop outside Lloyd's, or more likely the bar, and complain about the paper. That's hard, right? Or that's not hard. That's quite easy, actually. It's much, much, much harder to appreciate the incentives of the ecosystem that led to that, and then how you can also leverage those to improve the product and the experience.
Yeah, I talk about this a lot with sort of anything that is like a marketplace solution, is that you'll get a lot of conversations in the market, and then each broker or carrier, as you pointed out earlier in this conversation, was saying, oh, we've got our own solution to that, or we're working on a technology solution for that, and one of mine is about being objective and having sort of centralized neutral points of view, and it's really hard, isn't it, when you're talking about, when we make statements about industries being broken, they might be, but you've got competitive businesses, so they're all kind of out for their own agenda, so everyone's kind of fixing it on their own terms, and then but insurance is by nature has to be a collaborative environment because it's so interwoven. So yeah, we can all laugh, but as you say, it's another thing to actually make that challenge happen. Just shifting gears slightly, just to talk about carriers, Ralph. Appetites are constantly changing at carriers on a regular basis. I mean, how much of a challenge does that throw you at PathPoint? The carrier input. How does that kind of impact things for you?
The most interesting thing that I've found in this subject is that the original design, the original architecture and strategy of PathPoint was not to resemble that of an MGA. Okay, an MGA environment where you have one carrier solution for one industry vertical, and then building multiple solutions like that. That hasn't been their strategy. Their strategy was to have a small group of carriers by vertical. And again, this goes right back to many of the standard market insurtech operations that have been successful, whether it be Next Insurance or others, that you look in the marketplace and say, look, how were they successful? What they did is that they went in and they said, we're going to offer choice just with a very easy user experience. Well, that's the exact same thing that we're doing, is that we have several carriers on our platform. And when we add a carrier to our platform, the first place we make sure that they can fit is with our existing industry verticals.
Mm.
This allows solutions so that when the market shifts, when a carrier changes appetite, when there's legislative reasons that a carrier is going to have to exit a state or something, we're not going to leave our clients high and dry. We're actually going to have solutions in order to allow them to continue doing their business, not worry about remarketing their existing business, and continue staying focused on growing their book of business. So that's the one of the benefits we have in our strategy.
Yeah, it's the MGA thing's quite an interesting point actually, because that's de facto the way that most of these solutions have been brought to the table. So I think that's really interesting. I wanted to do it operationally as well about technology and operational challenges that technology bring to underwriting. Because this is a really interesting point, because it's I always think this. One, there's the individual technology stacks. Then there's kind of centralized solutions. Then there's kind of like artificial intelligence inputs. So we're constantly bringing new technology to the table in underwriting, but kind of operationally, kind of the challenge that throws you. I wanted to get your view on that, Ralph. And
yeah, it's a really good question, because the challenge that you have is the E&S space, the non-admitted market offering, is based off of a completely different underwriting and operational platform than the standard admitted markets.
Mm-hmm.
Okay. And so the convergence of that data from those admitted market applications to the non-admitted market application is where the confusion starts, and actually where the complexity starts, because you're breaking out a generic class code where, let's just use landscapers for the example. If you're a landscaper, the first question that an admitted market is going to ask is, do you do tree trimming? And if you do tree trimming above the ground, in other words, use anything off the ground, you're going to be declined.
Mm-hmm.
The second thing they're going to ask you is, do you do snow removal? And again, if you do snow removal, if you're in the northern part of the US, then of course they're going to decline you as well. The non-admitted space actually will break the operation into the individual components, underwrite them uniquely, and then blend them together to get a price.
Mm-hmm.
And building the technology that's sophisticated to do that is the first lift. The second lift is, how do you take all of the regulatory uniqueness of the non-admitted space and make that user experience as simple as you can for the agent experience? And again, that's a traditionally hard lift, because you have 50 different states, 50 different sets of rules. How do you systematize that to a very, very simple process? So by breaking down the overall process into the individual components and then solutioning to those components, you end up having a thoughtful and very user-friendly design. That is what PathPoint has done from day one. Is they've taken it and broken it down into those. What it has now translated to in today's world is, as we talk to other insurtech businesses that are focused on the admitted market space, we have the system capability to integrate seamlessly with them, because our infrastructure is sound. We're not trying to patch work a traditional insurance thought process. We had technology and technologists, engineers build the platform and build the way that it would most integrate with others. And then when you go to the next step about saying, well, geez, we want to make it more functional at the back end of when it comes to inspections, when it comes to premium payments, when it comes to, again, disclosure statements and surplus lines filings, the infrastructure, the core infrastructure is there. That's what makes this platform so unique. It's there, it's easy to build off of. And so as you get these changes, as you enter states or as you enter a new carrier into the platform, everything is ready to accept it and modify it in order to accommodate with very little frictional cost. Yeah.
Interesting. It goes back to that culture that Alex was mentioning as well, and we discussed about the not fighting against it as such. It's like just breaking it down and going, right, these are the accepted parts of the process, and how do we improve upon them from a technology standpoint. Alex, I wanted to ask you something about partnerships. That popped up a bit. in this conversation. Are there other insurtechs there that you've been looking to partner with and work with at different points of your kind of the value chain of your offering? Or can you see that in the future, or is there anything happening at the moment?
We have a few things coming up that I won't spill the beans on in this conversation, but I think the academic thing, a description of what's going on is that small commercial insurance is digitizing, or in fact, potentially has digitized, depending on how you define it. And by that, I mean, it's connected, it's self-service, it's not paper and email driven, it's web application driven. And I believe that happened in the last 5 years, or certainly accelerated in the last 5 years. And so you've got these large agencies, large brokerages, large technology platforms that these agencies and brokerages digitized on the backs of, or a blend of the two, digital agencies that are both technology plus salespeople and client advisors. And they have now, in a mature way, are placing their admitted commercial business through these systems, deployed in production, are ramping aggressively. And now they're running up into that 10, 20, 30% of the book that's not connected. And they're like, crap. Because we just told everyone and all our clients and all our salespeople and all our ops people that they could do this through technology. And it's not to suggest that they had a lack of foresight. It's just, it's difficult difficult problem to solve. Many of them have actually tried. And we got quite lucky timing wise in that we just happened to have a few of these conversations rather randomly and realized that our infrastructure and our piping that we are using to power our storefront that independent agents around the country are using, that same infrastructure can be used to solve this problem for these partners that are upstream of us and have their own businesses, but want to offer that really nice consolidated user experience. So that opportunity, we have a few things going live this quarter, and we hope to have line of sight to sort of being repeatable and some real data on it by the end of the year. But we're really excited by timing and luck. The market's shifted in the last few years, and we're in a great position to deploy our technology to help get that last third going online.
It's really interesting. I was smiling when you were saying that. I always respect a man that's started a business and accepts that there's a luck element to it as well. There's far too many geniuses without acceptance of the luck element that we have to listen to. And I think it was great timing, but great technology. You got to execute. But because I was thinking as you were saying that, I was like, I've spoken to, and I've even taken briefs on where someone has built a digital solution, and then they're always left with this bit of E&S business that they can't resolve. And what ends up happening is, the irony is, they end up building a traditional, like, in-house, like, broker-led solution to that. And then it's like, oh, everything is digitalized apart from this bit, which always makes me smile, because it always makes me remember a friend of mine ran a business which he very successfully exited, and I can't name it because he'd probably get in trouble, but essentially it was looked like a digital solution. You filled out all the forms, and essentially every solution led to something I've been exposed to buying insurance. Is that, oh, sorry, we can't do that online, you have to call us anyway. Now, my friend's
and you have to fill out a supplemental application. 17 pages, and half the information on that supplemental you've already inputted online. We're acutely familiar with this specific problem.
It always makes me smile, because my friend sold his business for a tech multiple because of that, and he went, "Oh no, it always says that. It was just the way of getting you to fill out the form on your behalf." But I think people are. It's a really interesting problem to have to solve, because you can digitalize everything, but then if you haven't thought about the E&S bit, how do you do that? So that leads into my final question for you, because I'm really conscious of our time. Alex, you did a very significant raise last year. I suspect plans are very, very firmly in play for all of that. But what does kind of the next 12 months look like for you in terms of kind of growth? Where are you focusing your efforts?
We are we take a very user-driven view of the world when it comes to our metrics right now. So we have over the last couple quarters really demonstrated an ability to repeatable acceleration of like the way we're acquiring users through marketing to independent agents. And that's a very sort of B2C playbook, I'd say we're running, blend of sales and marketing with sales further down the funnel, highly transactional. We're looking to maintain that pace, probably optimize it a little bit more. But really in that strategy, we're looking to start to go deeper with those clients. So rather than 2 quotes a month per user, how do you layer in more product, more markets, more packaging of product to say you can start to bring more of your E&S needs to PathPoint. And that is kind of a linear journey because of the way this works. We have to build the right products. We have to get the right user experience work. We have to get the right automation, what's referring into our underwriting team, what's going to the carrier. And so you go bit by bit, it's going to take quite a long time. But I'd say that's where we have a new vertical launching this week for restaurants. We'll launch excess casualty in the beginning of Q2. So we're already have started investing in this, and we'll continue to, and that just lets our users get more value out of us, which translates to more transactions per month. And then I'd say the other thing we're starting to layer on is this sort of B2B partnership to these larger pools of premium and users. It's typically small commercial business still and very similar user experience paradigm. So it leverages a lot of what we're doing, but we now have the back office capabilities to handle that type of volume without a degradation in service. So beginning that as well.
Amazing. And yeah, well, look, I never like to overstay our welcome. So we're just coming up to the 45-minute mark. So I'm really excited by what you guys are doing. I shamelessly was saying this off air, but I have to say it on air as well, because I think it's really interesting to see innovation in this space. I don't think we've seen enough of it, which is probably good for you. So we'll keep it that way. But I'm really excited to see your journey. So we had, thank you so much for both of you, Alex, Ralph. Thank you so much for your time, and I really appreciate you being a guest on the podcast.
Thank you.
Thanks for having us.
Thank you.